Hi guys, Gavin McMaster here from Options Trading IQ. Today is Saturday the 8th of October, and today I just wanted to do a very quick tutorial on how to trade credit spreads with the Interactive Brokers platform. It's a question that a few people have come to me with recently on how to trade these credit spreads, how to enter them into the system. So very quick tutorial here. We're looking at the SPY, and let's assume we're somewhat bearish on this ETF at the moment. What we could do, we've got some options chains here. Say we wanted to trade the 127 and the 130 bear call spread. You can see here we've got the bid and the ask of 86 and 93, and on the 130 it's 41 and 46. So what we want to be doing is we're going to be selling this option contract and we're going to be buying this one. We want to be trading somewhere in the middle of this, somewhere around 90, and somewhere in the middle here around 43, 44. So what I usually like to do, just to double check things, is I just plug these numbers into Excel quickly rather than doing things in my head, just to make absolutely certain. So we've got 86.93, 41.46. So 86.93, 41.46, and we just take the midpoint of each contract, so 89.5 and 43.5, and then we just subtract one from the other. And this is basically the midpoint of the credit spread, or roughly the amount that we want to be selling the credit spread for at a minimum. We could, of course, trade it just at the market price, in which case we would sell at the bid and buy at the ask, and it would cost us 40 cents, or we would receive 40 cents, $40 for each spread. So obviously we want to be a little bit closer to the midpoint, somewhere around 46. So that's something to keep in mind. You know, the bid-ask spread, you may not get the exact midpoint every time, but it's a good idea to be somewhere around the midpoint just to get a bit more value for your money on each trade. So one thing, to actually enter the trade, what we do is we just type in our underlying again. We go to combinations and option combos. From here, the default comes up as calendar spread. What we want to do is scroll right to the bottom and choose vertical spread. That's what we're trading, another name for credit spreads. Choose our month, call options, and we'll pick our strike. Even though we're selling this strike, we put the buy strike as the 127 and the sell strike as the 130. Okay, then we do select all, add, and OK. And this here just briefly tells us exactly what we're doing. We've got the option to either buy a vertical spread, which is buying the 120, selling the 130. That would be a bullish strategy. That would be called a bull call spread. What we want to do when we're trading credit spreads, we want to be selling vertical spreads. We want to be selling the call that's closer to the money and buying the call that's further out of the money. So this is a bear call spread. This is a bull call spread. Okay, so that always comes up just for a bit of information. Now we're outside of market hours at the moment, but what would normally happen during market hours, you would get a rough indication of the bid-ask spread on the actual spread, the actual bear call spread. So it would be, you know, roughly the 40 would be what you're selling it for, and probably around 50 would be the buy. So we want to be somewhere in the middle. What we always do is we click on the sell, so we're clicking on the bid because we're selling the spread. And that brings up our order entry wizard, and what we want to do, you want to enter in your number of contracts, however many that is. You always want to trade these as a limit price. I think you want to try and get the best price possible, 0.46. What you could also do, you know, if you wanted to be a little bit more conservative, you know, maybe you're waiting for the market to come down a little bit, maybe you want to put it in at 50 and hope that the market sells off and you get executed there. And that's really all you need to do. And create order and transmit. Then we just get up our confirmation order. Always a good idea to just double check things here, make sure you're trading the correct contracts, you've got the buy and the sell around the right way, check your price, check that it's a limit, your time in force. This shows you how much money is going to be paid into your account, and this shows you the change in margin. Okay, so we've got this is some warning. I think this is just because we're out of market hours, so we'll just override and transmit. Okay, so that's fine. Alright, and then when you're in here, you can actually go in and you can change the price. You can change it to a market order if you want. What I usually do is I'll generally do a good till cancelled order. You can very easily just change your price in here and hit update and just amend your price however you want. So that's basically it, and then your order will just sit there. This will be good for Monday morning, and it'll be sitting there when the market opens, ready to hopefully be executed. Just want to mention briefly that this isn't actually a trade recommendation, just a brief tutorial on how to enter these spreads in interactive brokers. So I hope you found this quick tutorial useful. If you've got any questions about how to trade credit spreads or how to use the Interactive Brokers platform, just shoot me an email, info@optionstradingiq.com. Also head over to the website. At the moment I've got a 1-month free trial on the IQ Trade Alert service. It's recently been released. We've had 4 trades, we've had 4 winners. One of them was a 35% return, another was a 20% return, so it's doing really, really well. Head over to the website, sign up for your 1-month free trial today, and just look forward to chatting to you, interacting with you, and just drop me a line if you've got any questions at all. So have an awesome weekend, everyone, and I'll look forward to talking to you again soon.